What's up, guys? In this video, I would like to highlight a specific trading model that I often use and I find it highly effective. So it does not occur every day. However, when it occurs, we usually can find in a particular trading session a very high probability trade. And I would like to show it to you. Okay. So the way it works is that we need to first identify our trading range from our previous day because we will refer to this as our high time frame trading range. For example, so in a previous day, we had a market that was going to do something like this. All right. And then we had a close in here. So this is how the previous day closed and the next day starts, right? So as we can see, we have a bearish trending market and we have a break of a low here. So now we know if we go into a current day, our trading range will be between this high and this low. All right. Why do we really need to know this? Is because it gives us a framework, and because not every day you will see prices go like with crazy volume up and down, right? We don't need to look back 20, 30 days before in order to identify our points of interest or our supply and demand zones, etc. We just need to look at what the current price action is offering us in terms of a setup and in terms of the range. So that's why I always worked with this high time frame range. And if we go into a current day, we will see that, of course, firstly, when the day starts, we have our Asia range that is basically developing. And we have, for example, we have a price. Wait, what is it? Here it is. We have price doing something like this, right? It kind of consolidates between this. And so when we, let's say, have this type of setup, the way I like to approach this is that if we know our high time frame range, right? So that is this whole section, this from this high to this low. We the only thing that we need to do is to find our high probability areas or basically points of interest where we can take a short in this case, because we have here a break of structure, a break from the lows, and we have right here a um, basically a confirmed high. So when we know and we have this information, we need to see that we have a price coming in our premium areas and we take it back to our discount areas. If you don't know what this means, the premium and discount stuff, basically what we need to do is, if you don't know, you just get a place a fib on the whole range, and everything above the 50% will be our premium. Why do we want to know that? Is because we want to sell high and we want to buy low. So if in this case the market is bearish, we want to see we want to identify a point of interest based in the premium area of the range, right? So, and that is basically what we're gonna do. So when Asia is basically completed and we go into our London session, what we want to see if we have a point of interest, and we found a point of interest somewhere in our premium area, right? And when London starts, the only way that we want price to do is come into our point of interest, and then we want to just short it, right? That's basically the whole setup. And of course, we can then see what type of setup we can use, and we will get to that. But basically, this is the whole concept. And let me just go over to the real charts, and I can just show you how this looks like, right? So I already found on one here on GBP USD. So let me just remove this one. So in here, this is basically the whole model. What can we see? This whole price action is from the day before. As we can see, we have here period separator. So this is from the previous day. What we can see is we have a low, we have a high, and then we have a break of a low. All right, and then we just consolidate in here. Okay, so what will be our previous day's range? Well, it will be this high and it will be this low, right? So when we go into our London session, as you can see, this is where London volume basically kicks in. What is one point of interest that we want to see price pull up to? Well, I can see here basically two. One will be our, I can see here a gap, an imbalance, right? That is one. But we can also take the whole buy to sell area in here as our second point of interest. Well, as you can see, we did disregard this imbalance, but when price got here, we got to sell off, right? So somewhere in here, we can usually find a setup and we take it back to discount or even our session lows. In this case, our Asia session lows. So that will be a great trade. And you can see this basically happen a lot of times. We are on the 50 minutes here, by the way, guys. 50 minutes is all you need to day trade. You can use the 50-minute to basically frame the ranges that you are working with. And then when price gets into these 50-minute POIs, points of interest, we can go to the lower time frames, such as 1 minute, and we can basically find a setup right here to short it, so we get a better risk to reward. This is basically the whole thing. Now, what I want you to do, if you really want to test this out, and I suggest you do test this out, just see if you can find some examples. In a previous week, maybe some other pairs. I use GBP USD, Euro USD. This occurs basically on all currencies. So you can try this out, and I think it's a very, very nice framework that we can use in our trading. So, cheers, and I see you the next time.